Hey, ladies and gentlemen, welcome. My name is Greg McLeod. Welcome to the weekly forecast, the Bears versus the Bulls. My name is Dr. Gregory McLeod. I'm the chief strategist and currency analyst here at Elite Traders University. And I'm also the founder and CEO. So good to be with you on this first, actually the 4th of July, actually. I'm so happy to be here, and I wish happy 4th of July, Independence Day here in the United States, and just welcoming you all, one and all, to this broadcast. And I'm looking forward to being with you and being able to share with you my insights and forecasts for this week on the various currency pairs and indices, and maybe a little bit of crypto too. Okay. And so we're going to get started. Just before we get started, I want to give you the risk disclosure on our screen to make sure you understand all the risks associated with foreign exchange trading, and give you a moment to take a look at that. And we're going to go right into our analysis here. We're going to use one of my favorite tools to use. We're going to use my market heat map. It's an arrangement of currency pairs by percentage change. It tells you what's hopping, what's popping, and what's dropping, and what's not. And you can go ahead and you can sign up for a free 30-day trial of my powerful tool for finding out what's moving in the market using my market heat map. It's also a suite of tools, and there's 81 free videos that are included with your free trial that teach you everything about Forex. If you're brand new to Forex and you're just getting started and you don't know where to start, you can start with some education that I put together to introduce you to the Forex market and give you a firm foundation. It's called the Forex Foundations course, 81 videos, and it's a packed full of value, and you can get that for 30 days for free, and it's just $19.99 a month after that. So you get tools and training and a powerful look at the market. Okay, let's go ahead and get right to it. All right, let's go ahead and go to let me go into your account. There's also tutorials like how to use the heat map, right? There's also bonuses. There is the $5,000 scholarship to Elite Traders University, plus the free access to the Forex Foundations course. You can click that button there, and then there it is. You get 12 months access to this powerful course. It's a $15,000 value, and you can get started there. Okay. So let's go ahead and get right to one of the first tools I'm going to look at, because right now the heat map may be a little bit slow right now. It's a little after 1 a.m. Eastern time. We can take a look at the Forex majors and see what's hopping right now. Everything's gray. You know, the Asian market, especially with a U.S. holiday, with the U.S. markets being closed tomorrow, it's gray, and meaning that there's not a lot of activity in the market. Usually when we get volatility or percent change from midnight GMT, greater than 0.25%, that's like the threshold. You'll start seeing it's either trending up in green or trending down in red. And right now we're gray, which is pretty typical holiday volumes. Okay, but there's 4th of July is a U.S. holiday, and does mean that other things aren't going on in the market right now. So let's take a look. First thing I like taking a look at is going through the trader tools. There's charts, there's quotes, there's economic calendar, Forex TV, financial news stream, market hours, technical screener, national holiday, sentiment, currency correlations, and a whole host of other tools there. The one we're going to focus on right now for our analysis is the economic calendar. This is a one-stop shop. You don't have to go just hopping around to different websites and things like that. You have a wonderful country with the flags. They tell you the time based on your local time. You can change the high-impact items. I like looking at the high-impact ones, and then we can look at those. Okay, so we had coming up for Tuesday, July 5th, because there's nothing going on in the U.S., is the RBA rate statement and the RBA interest rate decision. And it's widely expected for them to raise interest rates 50 basis points from 0.85% to 1.35%. Okay, and that's a high impact item, one of the largest, most influential news items for currencies are central bank interest rates. When a central bank raises interest rates, it makes the currency more valuable and causes that currency to go up. So at around 12:30, a little after midnight Eastern time, we would see the Australian dollar be in play. So, Aussie dollar, Aussie yen, and so this makes would you want to have your money in a lower interest rate currency or a higher interest rate currency? Usually the direction of a currency follows yields. Now, right now, Aussie dollar has been trending down. We'll talk about that in the technical. We're going to talk first of all about the economic calendar. Then we're going to switch over to the technicals to see how we can use this information to find some great trades in the market. Okay, this basically tells us where the party is going to be, and the Australian dollar is going to be in play with the RBA rate statement, a very important announcement in which the Reserve Bank of Australia, which is the central bank of Australia, they'll announce their interest rate hike. That's the forecast. A 50 basis point hike could be greater, and if it's greater, we could see a big move in the Australian dollar come a little after midnight on July 5th, right? Now, Wednesday, July 6th, we also have the U.S., its central bank. Even though FOMC does not spell bank, it stands for Federal Open Market Committee. Just a little joke there. And that's our U.S. central bank. And at 2 p.m., they're going to release their minutes. And the minutes are, the meeting notes. Why they raise interest rates, what their forecast on inflation is, because the Central Bank of the United States, or the FOMC, has a dual mandate of full employment and price stability. Price stability is another term for fighting inflation, making sure prices aren't spiraling out of control, which they're already doing, which means that if half of their job is keeping inflation in check, well, they're doing a bad job. If you haven't looked at the gas pumps recently, at topping $6 and $7 a gallon here in the United States, and in some places, it's still around $4.50 a gallon, but it's a lot higher than it was last year, and that's impacting everything from food, anything that's transported, diesel fuel is very expensive. So anything that travels on rail or travels on trucks, the price is going to be much more, and that inflation is going to trickle down into into everything that we purchase and buy. And the FOMC maybe they might be more concerned. But looking at the bond market, though, there's some indications that possibly that the big interest rate hikes that they've been doing are taking effect, and I saw prices of the pump a little bit lower. I mean, it's still $4.50, but it's a lot better than $4.99 and $5.20 for a gallon of gas. So it seems like those interest rate hikes are actually fighting inflation. So the biggest risk to the U.S. economy is not so much inflation anymore, based on what the bond market's pricing in. It seems as though that the Fed may be more focused on the possible recession caused by their hiking of interest rates. So they might say, hey, one and done. And if it is, then that would be very bullish for the stock market. And we could see a drop in the U.S. dollar. We could see a rise in Aussie dollar, euro dollar, pound dollar versus the U.S. dollar. U.S. dollar, we'll take a look at the chart on that, is impacted by interest rates as well. And higher interest rates, if markets are ahead of themselves and they've been bidding up the U.S. dollar thinking that there's going to be more hikes, well, the Fed is dovish and not going to hike as much as expected, then we could see the U.S. dollar actually fall out of bed, and we could see a big rally in risk, we call risk assets, Aussie dollar, pound dollar, New Zealand dollar, Canadian dollar, and also a rise in the U.S. stock market, NASDAQ, and the U.S. 30, and the Russell 2000. Those could rally as well after these minutes. So it'll be very important to take a look at that. On Thursday, July 7th, we have the ECB monetary policy meeting accounts, and that's a high impact item at 7:30 a.m. Eastern time. That's going to impact the euro. And so we'll also look at Friday, July 8th. We also have U.S. average hourly earnings month on month. That's not MOM, but month on month, comparing 1 month to the previous month. 0.3% was the previous number. Forecast calls for an unchanged at 0.3%. Also, at the 8:30 a.m. news cycle, there's two news cycles here in the U.S. There's an 8:30 a.m. news cycle, and there's a 10 a.m. news cycle. Sometimes there's nothing there for 10 a.m., so 8:30 is going to be very important. Also have average hourly earnings year on year. That's not YOY. Yo, man. No, it's year on year. Previous number was 5.2%. Forecast called for an unchanged at 5.2%. And then, earnings, if people are buying things, they're able to buy things because their incomes are going higher, then that is also a sign that inflation is going to continue. But if earnings remain flat, then the Fed is doing their job. Non-farm payrolls is the big number. Usually it's the first Friday of every month. This is the second Friday of the month because it was, it's so close. They did July 8th for it. So if you were looking for non-farm payroll last week and didn't see it, well, guess what? It's coming out this Friday. Non-farm payrolls expected. The previous number is 390,000 jobs that created. The forecast calls for a drop to 250,000 jobs, and that could be bearish for the U.S. dollar. And so that's going to be another big number. It's one of the biggest, other than a central bank announcement, non-farm payrolls. And you probably say, what about the farmers? Farmers work too. Well, they don't include all jobs but farms. Okay. So non-farm payroll. We used to have ADP. I don't see ADP anymore. Maybe that's a lower impact item. Canada also has average hourly wages year on year. Previous number is 4.45. No forecast given. They probably get it wrong anyway. And also a change in employment. That's 39,000 jobs, 39.8K. No forecast is given as well. So we have some big announcements. The Aussie dollar is going to be in play with that news. The U.S. dollar, the euro is going to be very big in play. The euro is considered the anti-dollar. So when I'm trading FOMC minutes or FOMC rate announcements, I'm always looking at the euro. $4 CAD is a good one too. And Canadian dollar is going to be in play as well. Canada is one of the largest suppliers of oil to the United States. And the Canadian dollar has been on a tear versus a lot of currencies because of that oil play of the Canadian dollar. Okay, so that's the economic calendar or the wrap up. And if you have any questions about that, you can post it in the chat boxes in the Facebook group where I'm posting this, as well as the YouTube. You can also ask questions about that as well. Now, these are big announcements. We have ways in our mentorship where we can actually forecast prices 4, 5, 10 bars ahead of time. It's like our crystal ball, and it's been very effective during these different types of announcements. I'll be releasing some videos this week as well. Make sure you like and thumbs up and subscribe so you won't miss any of the videos that I release. I appreciate you so much. Thank you so much for watching this economic calendar. Let's get into the technicals. I know a lot of you are going, yeah. Get to the good stuff, Greg. Get to the charts, right? So I'm going to start with the U.S. dollar index. And the reason why I start the U.S. dollar index is because it's the major currency pairs are versus the USD. Now, the chart we're going to be looking at is called the DXY, the dollar index, DXY. You're looking at trading view. I'm looking at a daily chart. Probably going to zoom out a little bit bigger, but by looking and analyzing the U.S. dollar index, we actually know where the pound dollar will go and the euro dollar will go and the Kiwi dollar will go. Those are other currencies versus the U.S. dollar. When we're trading Forex, we're trading the relative value of one currency versus another currency, okay? So it's like putting two boxers in a ring, and we want to bet on the one that's strongest right now, right? So if we look at a dollar daily chart, you can see this thing has been on a tear. After bottoming out, double bottom at the 89.51 area way back on May 24th, 2021, we've hit some multi-year highs in the 105.62. We haven't hit that area in a long time. We got to go back long time to even get, years. We have to go back to like 2003 to even get back to where this area. And there's lots of congestion here. If I can draw just a little bit of a box where we have all that congestion back from 2002. And that congestion area, if I said, well, Greg, that was like, come on, 20 years ago. But the market has a memory, and that's why I teach my students that in mentorship, in my compound day trading mentorship, which you can find out about by just going to www.4pillarsto6figures.com to find out more about what we do and how we forecast price and are in the market before other people are. Okay, it's our unfair advantage, but there you go. If you're using this, right? We have other things too, but I'm just obvious that we have that area of congestion where price back and forth for a long time from June 27, 2002 to December 2002. That congestion created this area where, guess what? That's where we're kind of stuck there, right? We're hitting up against that upper resistance area. But it's an uptrend, higher highs and higher lows. All you structure people out there probably say, well, Greg, it's an uptrend, higher highs and higher lows. Yeah, but the trend is our friend until it bends, and we're seeing that prices, this is a 50-period moving average I have here. It's like my synthetic trend line if I don't feel like drawing a trend line, but I'm actually feeling good today, so I'm actually drawing a trend line. I actually did my barbecuing a little ahead of time. If you follow me on Facebook, I showed you I did a little surf and turf with some shrimp and some ribeye and some chicken breasts. So it's going to be all ready for me to kick back and cold adult beverage and enjoy our nation's freedom. Okay, so here we go. And here we go. We have a nice little uptrend there. We're on a daily chart. We're finding some minor resistance in here. We're still in uptrend, higher highs and higher lows, but I say we get a break below 10. We're currently at 105.09, and if we got a break below some lower highs, we have a lower high. If we stay below 105.67, and then we make a lower low below 103.65, and break the 50-period moving average, or then we could see some type of reversal. Now, it looks like everything is pausing for the holiday. We 3 or 4 candles in the same zone, same area, and then we have the FOMC announcement, and that will indicate whether the Fed will continue to push the dollar higher by raising interest rates or talking about inflation. I have a feeling they're not going to mention inflation, or they're just going to say it's they've got it kind of under control. Maybe one more rate hike and one and done, and then we could see this sell-off here. So bulls versus bears. I am short-term bullish, medium-term bearish, and bearish. Well, I want confirmation, and my confirmation. I mean, our predictive indicators are probably already giving a sell on this already. But if you don't have access to that, then I just play it safe, because once this thing gets going, we're probably gonna tag out. Come back and retest this 101.22 area. Okay, so well, Greg, we don't trade the U.S. dollar index. Who cares? Okay, great. Okay, let's get to something that you can care about. Let's go to the euro. The euro is considered the anti-dollar, and in fact, it came out about 1999. January 1999, as an alternative to the U.S. dollar. It's a large trading block of the euro zone. It's composed of several nations, and those nations have gotten together. They got rid of their currencies, and they call it the single unit, right? And we can see that after topping out here in this 122.61 area back in May of last year, we've been on a sled ride straight down, right? But it was very important to look at where it ended up. And we ended up in this 103.66 area, which is a low that we had back in 2016. We tagged that area and hit it 3 times, knock 3 times on the ceiling if you want me. Well, we got 3 tags right there. And so we have a triple bottom. Triple bottoms are very rare. But we could see a break below this area, and we could go lower, right? But but these are the market has a memory. So this is a 5-year low, and so 5-year lows. I would look for some type of rebound. A break of the 50-period moving average would make me bullish, but again, the FOMC is probably going to be the So I'm short term bearish, medium term bullish, medium long term bullish, cautiously bullish, right? We are in a downtrend, lower swing highs, lower swing lows. However, we have a triple bottom here. So it'll be very interesting to see what happens. FOMC will probably be the deciding factor, whether we take off from here, come back and fill this row of downward sloping candles, and maybe we get back to 109. I mean, those who are like really like risky, maybe one. I mean, really the risk is like if you break the low, then it goes down. But you gotta figure your risk to reward there. You could, it's a pretty good risk to reward there. Because if it broke there and closed down below, then you're wrong. But if you're right, then you've got about a 500 pip move out of this. Okay. So, but still, you can drop in there. You can see long wick there on the daily chart. You could go down there and try to find some other opportunities here. But I would just look at these areas. Even a retest of 103 might be in the cards, right? So let's go ahead and take a look. We might even just move sideways until we have the FOMC announcement, right? But just watch this key area. This key area of support, 103.54 or so, right around this area. It's been hit 3 times, and once, twice, 3 times a lady. I love you. I'm not really good at song lyrics. I make stuff up. And when I read the lyrics, I'm really disappointed. Have you ever done that? You actually look up, now that you've got YouTube and all these resources, you can look up the lyrics to the songs, and songs you thought you knew the words to. It's really disappointing, right? Okay, moving right along, let's go to pound dollar, GBP, USD. And the thing about it is once you get the majors, they're all doing kind of the same thing, right? The dollar's been so strong, it's just beating up on these currencies. So all you need to do is just short them, right? But right now, like shorting here might be not so good because look, we have buyers that stepped in at this level, at this 119.78. You might as well say 120 area support. Round number. I mean, there's a long wick down here. Very, at the 114. When we get down there, it's quite possible we're below the 50 period moving average. If we break this low, which it held 219, but here 220 it broke. Actually, this is the COVID low. This is the COVID low. So and we were looking for a test. These are wicks there. So I'm cautiously bullish because we're hitting this area. But we could break if we break and close below 119.50 or so. Look for a price to move down to the whole number. Next round number is 118. Bankers support 118 the figure. There's also 118.50. This is downtrend, lower swing highs, lower swing lows. I wouldn't feel comfortable about getting long until we got above 123.13 or so. And if we do, we have a good chance to get into the 130. So you have a really good risk reward. Keep your eye on it. Put an alarm on it. Put some alarms there. You can put alarms are free. Set an alarm and say, look, I want an alarm right there, and say, hey, when this, send you an email. Great thing about it is you can send you an email, and you can say, hey, when this thing bounces up here to that level, maybe it will, send you an email. Because a lot of times what will happen is I'll mention it, put it in a video, and you'll forget about it. You go, wow, Greg, you're right, it's way up here. But it would have been cool if you had an alarm that sent you an email. Hey, Joe, look, it's at 122. Maybe you should buy, right? No recommendations given here. However, for educational purposes, this is something that you want to be made aware of. Pound dollar, again, short-term bearish, medium-term possible move to the upside. We're a critical juncture here. So this is like catching a falling knife. If you ever heard the analogy of the term, the stock market term, or the financial market, when you try to catch something that's falling, it's called catching a falling knife. The best risk reward happens somewhere in there because look, your risk, if you're wrong and it closes below the line, you know where you're out, right? It gets really dicey when you're trying to trade in the middle of the trend. You know, I don't know, will it go up any farther or will it turn around and go down? But it's hard to fall off the floor. You can fall off the floor, but if you have a defined floor, then you have a defined risk reward that you can say, hey, if this closes below here, I'm out. But if it bounces here, hey, I'm good, right? And your risk is very small. Let's go to NZD USD. And if you like, commentary, let me know. Again, same thing here. Here we actually have a snapback to this area. It's kind of a weak snapback. It's not like really, but the COVID low is way down here, and there's support here, and this could be a fake, like a bear trap. Bears got sucked in, then they'll probably take it up, then they'll suck the bulls in, then the bears who got short flip around and get long, and then they drop it, right? So watch out for the pop and drop. Yeah. I think it'll be a lot clearer probably Wednesday, Thursday. It'll get clear after, this, FOMC releases minutes. Okay. But again, bulls versus bears, I'm cautiously bullish medium term. But maybe, start Tuesday, we might be bearish a little bit. But I would look for a break of the 50. Look at the 50 period moving average. I use a simple. 50 simple is a good proxy. When that thing breaks, like here, let me pull that back. When we broke that 50, prices rallied a long way. When it broke below the 50, look, 50 is a really nice number. Now, sometimes it whipsaws sideways, right? And like here, it broke down, whipped above it, and I'm sure people got, it's the bottom. Look, it bounced off it, and then it turned back down, right? So nothing's 100%. We have higher percentage patterns and higher percentage ways of getting in the market for our mentorship clients. And you want to find out more about that, again, you can go to the free Forex Masterclass at www.4pillars-to-6figures. Okay, make sure you sign up. It's absolutely free. There's no charge at all. And in fact, after that, if you watch to the end, there's a free consultation with one of my team, and you can obtain the blueprint. Make sure you ask for the strategy blueprint, and what we'll do is we'll go through a little presentation to show you how we actually forecast the market. You can use it in your own trading, but if you if you say, look, this is cool, but I would rather have Greg's help, ask after that, and see if you're a good fit for our program. And if you are, we're very selective who we choose or who we allow in. But if it's something that you're interested in, then let us know. Okay. Anyway, moving right along. We looked at Kiwi dollar. We looked at AUD/USD. That's going to be in play, really in play. And I had some stuff going on here, right? Remove all. Look at that. That held, right? Remove all drawings. But this is a daily chart here. We're below the 50 period moving average. COVID low way down here, and we could keep going. We could keep going. The Duracell bunny keep going and going and going. It's been a sled ride. In fact, I had one of my students up 12% in one day, shorting the Australian dollar. Congratulations, Elmir. Okay. All right. So here we've got we're at we're in a little congestion zone here, and if the RBA raises interest rates, we may get a bounce. It may be a short-term bounce, but tradable. If we can get above 69, the whole number, round number, 0.6900, we could probably get back up to maybe the 70 area. It might be another opportunity to get short. It's been very weak. In fact, this is like a descending triangle pattern where we've got lower highs, but the bulls are barely holding on. In fact, they lost it here, and so if they don't raise as much as it's expected, we could see this thing drop precipitously. So I'm not too. I mean, we could get down to like 66.43. There's congestion back here. And if you want to do something else, well, especially, you can just take a fib from the bottom, do a Drake from the bottom to the top, and now we're here. Boom. Okay, that's oldie, right? Drake has oldies. All right, we're at the 50% fibbo right there. 618, 64, 61, right down here. Okay. If you want to find out more about Fibonacci's and things like that, again, we have a Forex Foundations course that's built right into the My Market heat map. $19.99. It's the best deal in the world to learn how to trade, or at least learn about the markets and get started, and it gives you a good foundation. So if you were looking at mentorship after that, it's a good first step. Okay, Australian dollar. There you go. I'm more bearish on this than anything else, only because it's very correlated to risk into the S&P, and I'll get to that in a minute too. Okay. Let's look at the dollar pairs like USD, JPY. USD JPY is a weird one because it has two risk off currencies. The dollar is where people run for safety. The Japanese yen is where they run the safety too. So when you have two currencies that are kind of slugging it out, the dollar yen, the dollar might be winning this battle. Let's check, and it is a tore up. New highs, bouncing off. Look, bounced off the 50, bounced back above the 50. Now we're testing the 50. So this is going to be very, very interesting to see. Do we bounce off this 50 period moving average and go to a new high, higher highs and higher lows? But we're making our highs are not as strong as before. Maybe a double top there. I mean, basically we've been moving sideways for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. And we're at the bottom of the range. So maybe we get a bounce from 35.27, and maybe we can get back up to 36.56. But if we break the 50-day moving average, we could see a sharp move down to the 31.52 area. Okay, so got a little bit of a triangle, a little bit of indecision there. And with this topping pattern here, I'm probably bearish. I'm dollar yen bearish. Let's go ahead and move on to USD CAD. Okay, and there you go. Now we've been in a range because it's a fight, because the Canadian dollar is one of the largest suppliers of oil to the United States, but also the dollar is very strong because of the interest rates. So you've got basically two things that are working for both these currencies. So in a fight, they're slugging it out. No one is really winning this game or winning this match. All drawings, and you can see we're just kind of like messing around here, right? Now, and we're just kind of slugging it out. We had a downtrend, and we've been slugging it out sideways, and we've got this kind of weird channel that's forming. I mean, they call it the loonie for a reason. No, it's the bird, right? Not that the currency is behaving lunally, if that's such a word. But we've got this weird kind of wedge pattern here that we could see maybe a break. If interest rates do maybe the Fed pauses their rate hikes, we could see a drop. But what we're seeing here is that this is like a range trade. Buy at support, sell at resistance, buy at support, selling at resistance. It's actually been a pretty nice trade. Selling off the top of here and taking it down to the bottom. If you threw Bollinger Bands on there, it's a great range trade. But usually ranges eventually break, and a lot of times we see this, and you try to get short, and this thing shoots up, right? Or it shoots down and breaks this channel. So ideally, if we saw it earlier, little head and shoulders top, took it down, broke the 50, moved up. So we break the 50, we could come down, okay? So bulls versus bears, I would stay away from this unless they got a break below the 50, and then I would look for the 50 comes in at 28.33 or so. Is that right? At 28.29, 28.30. If we can close below that, then we could probably see a retest of the low down here at 25.75. Okay. And if we got down there, I wouldn't try to buy it back up because, the Fed would have made their decision, and that probably would take this further down, and then we could see, if we saw a break, we could see a cascade move down to the 120.32 area. Okay. All right. Now, we've covered dollar Swiss, which is like it's the opposite of the euro, right? And let's remove all drawings, and you can see, look at this. We had big double top here, back here in June 16, 2022. We retested the high, came back down below the 50 period moving average, found some support. We broke below the support. Now we're back up, and this is really messy. We have a slight uptrend that we've bounced off of, right? Slight uptrend, right? So we could see a move higher to the 50 period moving average. However, a break below 94.37 opens up a lot. We could open up down to 92.95. Okay, so just look at that wick. Buyers stepped in there. If those and their stops are just below that. So if price ran in those stops, broke that trend line, then we can see prices drop down to this next wick down here, and there's a congestion zone there, right? Ideally, if it got back to the 50 and found some resistance right there, that'd been a nice place to maybe look to short it, right? Sometimes what you can do is take a fib on the last leg and then see, okay, we bounced to the 23% retracement, which just usually doesn't hold. And then the 38% retracement is right where the 50 is, and that takes us to like 97.16. So if you want to get long and look for a move up there, that would look interesting. But again, this is really messy. It's kind of an uptrend, higher highs. The structure people say, well, it's a lower low, but we don't, and we do have a lower high. And so, we break, we could come down much farther, below 99, about 95 the figure. So we're stuck in no man's land here. We do have an ECB, some type of announcement coming up this week as well, and that would probably impact this too. Also, the FOMC announcement as well. So everything's kind of moving sideways until then. Okay, let's get into some indices. Let's go into SPX 500, SPX 500, right? We can look at that on the daily, and I'm gonna actually go out to weekly, and you can see that we're coming down. We're coming on down, like Bob Barker and Price is Right. Come on down. Yeah, it's coming on down, right? 38% retracement, 37.97, and we're teetering with that. And, I'm sure computers and algos, they see that 38% retracement, and they'll say 38 retracement at 37.97 buy, and the buy programs kick in, and then, but it's below the 50, and we could get down. Usually the 50 back at 34.90 may be more in line, right? We may come on down here, and there's also a congestion zone here in the 618, which is a typical Fibonacci. We get down to 31.90, and from there we may see some type of maybe summer rally from there, especially if the FOMC says, hey, you know what, I think we shocked the market with a 75 basis point rate hike, the largest one since 1994, and we got price stability. Now the risk is the whole U.S. economy could blow up because of the interest rates are so high that the houses aren't being sold and transportation is slowing down. But they say the supply chain is actually loosening up. So a lot of the inflation is due to supply chain things. I went shopping today. I was shopping for some steaks and some stuff for 4th of July. And I saw the well-stocked shelves, stuff that, like sometimes you like, all the hot sauce is gone. Well, it's held up on a truck, right? So I think the supply chain is starting to come, loosen up a bit, and that's going to also be a factor, that's going to loosen up prices as goods are able to get to the market, and there won't be short supplies, and so that kicks in. Well, that's independent of what's going on with pricing. When it comes in, that's just going to make things available cheaper, and that would help the Fed not have to raise rates. Okay. So, but I still see we might get a little bit more of a pullback down, and then a move up. And I think we move up and retest the old highs too, or at least get up where there's congestion there. Maybe get back to the 23, or maybe back up to this old high 46.12. But we might just come back to the 50. But I think we have more downside to go, just because we've got congestion here that hasn't been tested, and so that's and our indicators are showing that this is go a lot lower. Okay, so SPX 500. Let's go to NQ, which is the Nasdaq, QQQ, Nasdaq similar. Bearish close. 11,532.25. Boy, did we fall. Man, the money has fallen, right? But, we are coming up to some classic support. We're at the 50% retracement of this swing here. If you back it back here and say, okay, well, we're at the 50 now. 618, though, comes down at 10,130. So we could still have a little bit more to go to the downside, right? Before we get, so I'm short-term bearish. I'm actually medium-term bullish. I'm actually looking for this to stop, the pain to stop. The Fed can't allow. Yes, they fuel this up, and yeah, they pull the punch bowl away, but they can't let this collapse down. So much technical damage will be done that we'll go into a recession. People are already, analysts are already saying that we're already in a recession, right? But there's always every McLeod has a silver lining, right? So that's Nasdaq. So that's we're looking for maybe a drop and then a bounce higher. Okay. Let's look at Bitcoin. How about BTC USD? You want to take a look at that? And boy, we have dropped. We're looking at, this is our trend line break at the 50 EMA, 50-week EMA, right? Let me remove all drawings here, right? And we're finding, wow, we're back, we're right here at the old high of 2017, right? So, there's talk about there's no buyer. Usually when price breaks out, we call this, in our mentorship, we call it RTTSC, or return to the scene of the crime. Price broke out here back in December 2020, rallied up to a high of about 69,042, and dropped all the way back down right to the top of the old high, right? Return to the scene of the crime. Now, usually if we see a return to the scene of the crime, we see a bounce. So we may get a bounce here. There's also a little congestion here, a little congestion zone. And so price came right to that area, right to the top of that old high. And that could be a place for a bounce. Now, if we were to take a Fibonacci, now I know people give Fibonacci a lot of credit for this, but he actually, he traveled, east. He traveled to China. He traveled, traveled to, like Marco Polo, traveled to India. And actually, these the Fibonacci's are really Indian. But don't tell the Indians that, no. We figured, an ancient civilization has been around for 4,000, 5,000 years. They kind of figured this stuff out already. And Fibonacci goes, hey, well, that's a good idea, right? He brought Arabic numbers. He brought the numbering system. Before, we were using I, IV, V. We were counting with Roman numerals until Fibonacci came back with them, and brought them They're Arabic numbers we're using. So thank the Arabic peoples for their numbering system, because can you imagine writing IIXLLMM? My goodness, All right, so right here we're sitting here at this level. We've been sitting here for like 1, 2, 3, 4, 5 weeks. Not days, but weeks. Let's go to the daily chart. And you can see that we're forming some kind of bottom. We break above the 50-period moving average. We tried, failed, tried, failed, tried, failed. And a lot of people are kind of washed out, margin calls, But, they're trying to shake everybody out. Everybody gets shaken out. They give up. And then, boom, a blow up to the upside. And we come back, this is a big gap here. We can get back to 32,000 really, really quick. Really, really quick, right? So I am actually short-term bearish, medium-term, I'm really bullish. Okay. I think this thing goes ballistic, especially if the Fed stops. You got to understand, guys, if the Fed is raising rates, there's no way Bitcoin can rally. If the Fed slows down or stops raising, then now it moves with the stock market, right? People call it was an alternative currency, it's an alternative. So no, it's not. It moves just like a stock. It moves just like the S&P. It moves in the same direction. It's correlated, highly correlated. So you're not diversifying by getting into it. Just got to understand that if the dollar is going up, it's BTC versus USD. And if I showed you the USD chart, the USD was skyrocketing, right? Oh, you guys say, oh, I don't remember that. Okay, let's compare. Let's put DXY on top of this chart. I don't know if the scale will work because of the size numbers. No, it's not. But it'd be cool if you could. But the direction, maybe if I use logarithmic or something. No, that's not going to help. Let's turn that off. Okay, let's get rid of that. Anyway, you saw the direction. Okay. So I'm looking at, if we break the 50-day moving average, if we break 20,000, then we've got big run to the upside. Okay, basically we gap down from 29 down to 19, so that's a $10,000 move in Bitcoin. Okay, so that's pretty much it. I want to again thank you for watching. If you have any questions or currencies you'd like to see covered or things you want me to talk about, make sure you send me, type a little comment, hashtag Greg McLeod or something. I don't know how those hashtags work. Anyway, I hope you enjoyed it. I wish you guys a profitable trading week and a happy 4th of July. And I look forward to seeing you on YouTube, social media, and Facebook. Make sure you like, subscribe. And check out Elite Traders University. Come over to our website. Come over to, what's our website? EliteTradersUniversity.com. Take your trading to new heights, all the right tools and training to start trading professionally in 90 days. You can watch our intro video. You can there's a free masterclass, an income boost blueprint, ebook, lots of things to help you out in your trading here on our website. Talk to you soon. This is Greg McLeod signing out. Peace and pips. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!